Based on my views on next year in the stock market, based on my views on where AI is, there were a lot of AI bubble fears in the month of November. A lot of them were related to OpenAI, to NVIDIA, to CoreWeave, to Oracle. There was a whole bunch of things going on where people were freaking out. I think people have to get back to the relationship of Bitcoin to AI. Now, where we're finished at this 92, 93, we're unchanged for the year. So I always get back to this thing with Bitcoin that I believe in. I don't worry about where it's going to be over the course of the next 20 years. I don't worry about the network effects. I don't worry about it being the only thing that doesn't have a moat. But the most important thing for people to leave from me today, and this—
Visser fundamentally believes that the extreme wealth concentration of the Magnificent Seven cannot exist without the K-shaped economy they are actively causing. While the top half of the K, the tech giants and the wealthy, are accelerating their dominance, the bottom half is collapsing. The small business bloodbath, the data is stark. Visser points to the numbers showing a sustained period of negative job growth for small businesses.
November was a historic month for the stock market as well. People may not know that, but I spent a good portion of my career on factors and growth, value are the ones people know, but momentum. And when you take factors, especially a momentum factor, which we've talked about on here before, Bitcoin is very much correlated to momentum, but it's the long side of momentum. So whenever people hear factors, think of it as the top 10% of some factor relative to the bottom 10%. And in this case, the long side of momentum during the month of November relative to small cap stocks, which allows you to kind of normalize the volatility, similar type moving things, had its worst drop since the great financial crisis. So you're talking about a sharp fall. Now, Bitcoin fell as well. That wasn't the catalyst, but I think what people are going to have to get used to is this relationship between the retail part of the stock market and Bitcoin. Because I think the energy for Bitcoin comes from the people who have followed you for a long time. It comes from those people. It doesn't come from hedge funds. If anything, I think hedge funds are so skeptical that whenever they see a simple moving average breakdown and they want to short something, Bitcoin gets a very crowded short. So if you take the hedge fund and the retail unwinds, you add that into what we were going through anyway, which was consistent selling from OGs, I think it made sense for us to go down. And we did talk, and I remember saying we could go down to 80. It wouldn't be a problem. We did. I think the bounce back has been quite impressive, but it's also coincided with the stock market going higher. One of the things I said, which I feel very strongly about, based on my views on next year in the stock market, based on my views on where AI is, there were a lot of AI bubble fears in the month of November. A lot of them were related to OpenAI, to NVIDIA, to CoreWeave, to Oracle. There was a whole bunch of things going on where people were freaking out. I think people have to get back to the relationship of Bitcoin to AI. Now, where we're finished at this 92, 93, we're unchanged for the year. So I always get back to this thing with Bitcoin that I believe in. I don't worry about where it's going to be over the course of the next 20 years. I don't worry about the network effects. I don't worry about it being the only thing that doesn't have a moat. But the most important thing for people to leave from me today and this weekend, which I will cover extensively on my YouTube, we are at a major inflection point that to me is very similar to what ChatGPT did. So we're ending LLMs. And the reason this is important for Bitcoin from a where the money going type thing, the fiat assets are dominated by 7, 8 companies in terms of their market cap. They're all in some way associated with AI, but they're all associated with coding. This is the year that vibe coding, which everyone now knows is a word, was the ChatGPT moment. And part of the factor unwind, part of the thing that has hurt Bitcoin all year has been this move away from growth. And when I talked about this a couple of weeks ago, there was the negative comments were about, oh, now Jordi's bearish on tech and blah, blah. I am so bullish on AI, but I do believe that we are entering a new phase of AI, which has nothing to do with the textual and software side. It has to do with the physical AI side. And I think it started. Bitcoin's going to benefit next year relative to growth stocks, but this year it got caught up in the growth.
While Bitcoin got caught up with the growth stocks this year, Visser predicts Bitcoin will benefit massively next year relative to those same growth stocks. Why? Because the market needs a massive, coordinated boom.
what seems to be happening right now is there's obviously the lack of trust in the institutions and kind of all the stuff that's very well documented. You have a degradation from a socioeconomic standpoint of a lot of people. So now people are saying, wait a minute, the existing legacy institutions, systems, people, etc., is not working. I need something new. Some people go look for political solutions. Some people go look for religious solutions. Some look for technological solutions. But you have Bitcoin and kind of the rise of, let's just call it financial infrastructure in a digital age. All of that is coming to head at the same time, AI and robotics. So again, kind of automation, right? I actually think the financial plumbing and infrastructure is automation to a degree. So you have this big automation trend meeting Kevin Hassett or whoever the next monetary, kind of chief will be, who's saying, wait, we have to go towards easy monetary policy. And to me, that really feels like as these things come together, that's the thing that pushes the stock market significantly higher. It's not just AI, because just AI alone without the macro backdrop, you'll get gains as we've gotten, but I don't think that you're going to get the type of gains that people are promising from the boom, right? It's kind of like there's an AI appreciation, which is nice, but people want the boom, right? They want the, how do we go up 50% over, 18 to 24 months? And it's almost like the multiple trends coming together really is what is necessary to do that. Do you agree with that?
Yeah, it's an interesting way to put it. And let me take some of the pieces you mentioned. Let me take Kevin Hassett and directly connect him to Mamdani. Okay. So the Trump administration, Republicans, investment believe that if they lower rates, that will help bring affordability back. That'll help the people that have been suffering the most. On the other side, you have voters voting for Mamdani, who's promising free stuff or something. You might disagree on the politics involved, but I think at the end of the day, they're kind of meeting in the same place, which is we have a lot of people that are fitting into the Michael Green article of where's that poverty line now? Do people at $100,000, are they at poverty? Clearly they're not at poverty, but his argument on how difficult it is to live life at this point is directly related to the macro trends you're talking about in AI. It's something I fundamentally believe in, is that the concentration of the Mag 7 don't exist without the K-shaped economy. That group is causing the K-shaped economy. We talk often with people about the job market. ADP came out this week. We don't really have payroll numbers. They're on some coming back to market. But ADP,
they weren't counting when the government was shut down.
I don't know if you saw the guts of the ADP number, but there's two things that to me are interesting. Number one, 6 of the last 7 months, the ADP release has had negative jobs for small businesses. So go back to the K-shape. There's a lot of businesses, small businesses that are not hiring and firing. But the number for November alone was minus 120,000. Now, to define a small business, that is 0 to 49 employees. That's a lot of businesses that probably went out of business. And that's what AI is doing to the economy and will continue to do, the same way that Amazon disrupted the retail mall names and put the pressure on this. Because rates are high and not coming down fast enough, Donald Trump is correct that this is a problem. On the flip side, you have AI that's also disrupting and causing small businesses that can't compete with the behemoths who have AI and are kind of disrupting all of this. So you've reached a point that, on your point, these macro forces, they're all coming together. And that is why and I mean, I'm getting into a lot of things that we could double click on, but the Genesis mission is so important because they don't have a choice. They have to accelerate AI because on the other macro force is this race against China for AI dominance. So when people listen to this podcast, and I've had a lot of people on the hedge fund side that have gradually migrated here because we talk about a lot of topics that are important. We approach them from a different perspective because you're coming from a different angle. We meet at Bitcoin. I think for people listening, one of the hallmarks of what you said, on the one side, the financial digitization that's happening, the guardrails that are going up, are directly related to all of the macro forces, whether it's the AI race with China, whether it's the job losses that are happening in the K-shaped economy, they're all linked together. The problem is for most people, and what I don't think they fully grasp, AI is the most important force now of those two. And I also believe it's the solution down the road.
Bitcoin, in this context, is the perfect anti-growth stock. It is an opt-out of a system that is fundamentally broken by this concentration. It is the purest trade on the need for new financial plumbing in a rapidly automating world.